QuickBooks Online 2025. Enter check forms, which are similar to expense forms, to record both expenses and prepaid assets. Get ready and some coffee, because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file, opening up our major financial statement reports the way we do it every time. The reports are on the left-hand side. We're in the standard reports favorites section, right-clicking on the balance sheet to open a link in a new tab, right-click in the profit and loss to open a link in a new tab. Let's go to that middle tab to close up the hamburger. Change the range for 010125 to 013125. Run it so we can have fresh reports. That's the great thing about QuickBooks. They don't serve up old, moldy reports. We can always refresh it. It's not even putting them in the microwave. It's just totally fresh, like they just came out of the oven reports. Let's go from 010125 to 013125. Once again, run it so we have a refreshed report there as well. Tabbing back to the left, remembering what we have done thus far. We entered the beginning balances after setting up our QuickBooks file, got the capital necessary, the cash that is, in order to make purchases of property, plant, and equipment, as well as inventory needed to generate revenue. And then finally, we generated some revenue, mainly through the sale of inventory, finally recording something on our performance statement on the income statement. So now we're going to imagine it's the end of the month and we deal with those kind of transactions that happen periodically. They're the most routine and most likely predictable transactions, those being the bills that come up, say, on a monthly basis, for example. Noting that these bills, which we can enter with an expense form or possibly nowadays with a check form, as they are going to be more electronic transfers, same kind of idea with the forms that decrease the checking account, are usually the transactions that can be automated with the help and use of the bank feeds. So just want to point this out. We got a whole nother course or section on bank feeds themselves. But as we go through this normal transaction process, we want to touch in on when the bank feeds would be most relevant and when they would be most problematic. Going to our flowchart, noting this is the desktop flowchart, which we're using for online purposes. We're just looking at the flow of the forms. When you think of the bank feeds, you want to break out the difference between the money going out of the checking account, which is going to be the vendor cycle or payment cycle or expense cycle, and the money ultimately coming in from the customer cycle, right? And so on the customer cycle, the question is, how can I fit in the bank feeds, which is often more complex because you might have to deal with accounts receivable, which enters a transaction that doesn't yet have anything impact on the checking account. Versus if you're a gig worker and you just get paid by like YouTube, for example, you may be able to wait till it clears the bank to record revenue with a deposit form. Then you can think about differently on the money going outside of things, which mainly with small businesses is something we can automate with the bank feeds, which is great, which means that oftentimes for small businesses, what we would like to do is try to get ourselves or our clients to use electronic transactions, recording payments directly out of the checking account, because those transactions most easily flow through the bank feeds, giving us the most information for the electronic transactions, including a memo, which usually has the detail of who we paid, not the account that we should hit. In other words, the memo is going to tell us that we paid Verizon for the telephone company. We paid Edison for the utility company. Then we can take that memo data of who we paid and determine what account it should go to: telephone expense, utilities expense, or electric expense. That's going to be our general idea that allows us to customize things. Now, notice you might have a business that has cash flow problems, in which case they might use a credit card more often. That is also something that we can connect to the bank and basically use the same form, an expense form, which instead of decreasing the checking account will increase the liability account, but can still be connected to the bank, and we can still do the transactions in a similar fashion. Now, you might have some businesses that are like, hey, look, I like writing checks. A lot of people, especially older people, they're comfortable writing checks. They like checking the check number. They like the internal control of tying the check out. They don't like giving their, doing electronic transfers, would have their banking information online, even though that's there's not really any getting around that these days. But I get that. So in that case, if that's the case, then it's going to be a little bit more messy in order to connect to the bank feeds. We can't just write the checks, wait till they clear the bank, and then record the transaction as they clear the bank in that case. Why? Because the whole point of the checks is there's going to be this big lag between when you write the check and when you clear the check, because the check has to be shipped or mailed. The other person has to get it, deposit it in their side of the bank, and then their bank has to talk to your bank to determine that the check cleared. So there's going to be this big lag between writing a check and when the check gets deposited, which means that you have to enter the check when the check happens, not wait till it clears the bank. The thing that gave the bank feeds so much power these days is not just the technology to connect to the bank, but the technology to make the electronic transfers instead of checks, which creates the turnaround time for the bank to be aware of a transaction much shorter, allowing us to basically more rely on the bank as the person that's going to tell us what we're going to record. Instead of with a check, what we're doing is we're going to record what we're going to record on our side because we know more than the bank, because we know we wrote a check. The bank doesn't know about it yet. They're not going to know about it until the other person cashes the check. So from the bookkeeper standpoint, what we typically want to do is try to get people away from the checkbook normally and see if we can get them on to electronic transfers, in which case we're going to move away from maybe a full service accounting system where we record the transactions when we pay them and instead wait till they clear the bank, depending on the bank, to record the transaction with the use and help of the bank feeds. Okay, that said, let's go to the first tab. And we can see down here the bank feeds would be coming through on the transactions here. So it would be coming through the bank feed transactions. We'll talk more about them later. But for right now, we just want to get used to the forms, remembering that if you recorded something with a bank feed that was a decrease, it would be an expense type form, which is in essence the same as a check form, except that it doesn't have a check number, right? So it's the same transaction form that decreases the checking account. Okay, so let's try one of these out. We're going to say hit the plus button. We're going to enter a check form. So these two forms, again, are basically the same, an expense form and a check form. The check form just has a check number field and allows you to print the checks if you want to print them. The expense form doesn't have a check number field because the assumption is that you paid it with an electronic transfer. Also noting, however, that the expense form does not mean that you only use it when you're entering an expense. Most of the time you're going to use it with an expense, but you might buy an asset, for example, like property, plant, and equipment using an expense form. Okay, so let's go into the check and check it out. So we're going to type in, now notice oftentimes we can enter a new vendor as we go. If we were entering this into the bank feeds, then, and it was an expense type of form in the bank feeds, what we would do is we would get this information from the memo. Now, I just want to point out that technically, what do you need in order to record a check form or an expense form? All you really need are the two accounts and the amount that is impacted, meaning you need to know what account it's going into. So if it was coming for a telephone expense, I don't really even need to know the payee because it's already cleared the bank. All I really need to know is what account it's going to hit, telephone expense, and the other side is going to decrease the checking account, which means it might be possible to enter this information from the bank feeds without actually taking the information from the memo and adding the payee, otherwise known as the vendor. But you don't want to do that. You want to add the vendor whenever you can, is the point. Because if you don't add the vendor, then you're just losing some information to track. Like you could search things by vendor. You don't have to. The financial statements will still be correct if you don't do that. But if there's a problem with the payment, it'll be easier to track the payment if you add the vendors. You might as well add the vendors because you have the information that comes through the bank feed memo. If we write the check first, then of course we're going to have the vendor because we're going to write the check to the particular vendor. In this case, I'm going to say it's going to be adding the vendor as we go, Safe Insurance Company. So I'm going to imagine we're paying our insurance company here. We're going to start with a somewhat more complex one. And we're just going to add the vendor as we go. I'm going to hit tab, adds it as a vendor. Now, do I need all this other information for a vendor? Usually not. because all I need to know is who to write the check to if it were a check, or if it comes through the bank feed, I just want to be able to sort it by vendor if I needed to. So we'll just save it with that minimal information. It's going to come out of a checking account. Now remember, if this was an expense form, then you will have the option of not only the checking account, but also the credit card account, because you can, instead of decreasing the checking account, you record the electronic transfer that would increase the other account that connects to the bank, which could be a credit card. All right, and then we're going to say this happens on 126, let's say. The check number populates automatically. Now, if we were actually writing checks, we could get actual checks that we're going to print from QuickBooks, in which case we can print later, put all the checks into the printer, and then print them, lining up the check numbers that are on the physical checks to what is in the printer only printing out the information of the amounts and so on. Or you can actually use a physical handwritten checkbook. And if you do that, then just make sure that the check that you are writing ties out to what's in the system here as you write them, would be the general idea. All right, so then we're going to say the store, the payment number, no tags that we have. I'm just tabbing through this. Then we have the fields down below, the category and the items. You will recall that we used the items when we bought inventory. So if we were buying, in our case, guitars, we would be down here using items, so that if I'm using a perpetual inventory system, the system can track it on a perpetual basis with the data that we put in for the items. But normally, with everything else, the normal purchases, we just have to assign it to a category. So in our case, how would we assign it to a category? If I'm a bookkeeper, I might not know what I'm paying for because I'm the bookkeeper, I'm not the owner. But obviously, I know who we paid, in this case, Safe Insurance Company. So that sounds like it's going to be some kind of insurance. Now, if it was a continuing business, then of course, what would I do? I would look at last month and I would continue just recording. So accounting is very systematic like that. In the first month that you do the data input, it's going to be more complicated because we're going to have to make sure that we record to the proper accounts. But in the following months, it should be easier, because as we pay the same vendors in a cyclical fashion, we should be able to populate the forms basically automatically, would be the general idea. Now, I also just want to point out that you will recall that when we set up our chart of accounts, let's open this up. I'm going to right click up top and duplicate this tab. I'm going to pull this to the right and just take a look at our chart of accounts. I'm going to close this up and go into our transactions, and then into the chart of accounts, closing up the hamburger. Now, when we set up the QuickBooks file, our option was, do I want to use the chart of accounts that QuickBooks gives us, or do I want to make all of these accounts inactive and create my own chart of accounts as we do the data input? Oftentimes, people aren't comfortable deleting all the accounts or making them inactive. Therefore, our strategy is usually going to be down here in the expense accounts. That's when we're going to have the most type of accounts. As I do the data input, I'm going to look in this chart of accounts and say, is there an expense account that ties out to what I'm doing the data input for? If there is, I will use that one. If there is, but I don't like the name, then I'm just going to adjust or edit this account. And if there is not an account here, then and only then will I add a new account. After I do that for a few months of data input, I can then go back into this chart of accounts and delete the accounts that are not active, that I'm not using, or make the accounts inactive. That's going to be basically our strategy. All right, so we actually picked another kind of weird one when we started off in insurance. Now, whenever you see the insurance, you've got to be thinking, all right, this might be a little bit different than the normal expenses, because I might still be paying it on a systematic basis, like on a monthly basis, or possibly more likely on a yearly basis or a semi-yearly basis. But it's different than other kind of expenses. Most expenses, for example, like a telephone expense, when I get the bill from like a Verizon for the telephone expense, they actually are counting up the use of the telephone that I've already consumed. By the time I get the bill, then I'm paying for something that I've already consumed. Therefore, the appropriate category would be on the income statement and expense. But with the insurance, by definition, you pay for insurance before you actually before you actually consume it. Now, that gets really messy these days because a lot of times when you look at like health insurance and even car insurance and whatnot, they're trying to make insurance like a right or something like this, which means that you're really converting it from insurance to some subsidy. I don't know what it would be in that case. So it gets a little muddy in terms of what kind of insurance you're paying for and should you record it as an expense. But normally, if you're talking about like liability insurance, which you would have for a business, then you would pay for it first before they give you the coverage. Now, this is also somewhat abstract because you might say, well, look, you never get anything from insurance unless something bad happens, like someone sues you, then the insurance might kick in to help you to cover for the liability of a lawsuit or something like that. But that's not really true. The insurance does give you something. It gives you coverage, right? You're paying beforehand to be covered in the event that something happens, therefore decreasing the risk of loss if something happened in the future. But when you pay it, you haven't yet got it because you have to pay it before someone's going to reduce your risk with coverage in the future. Now, if you paid the insurance on a monthly basis, then you might just expense it and say, yeah, I'm paying it on a monthly basis. So whatever, it's close enough. It's the next month I'm paying for now instead of last month's phone bill I'm paying for now. But oftentimes you pay for it on a yearly basis because it's cheaper. So if you pay it on a yearly basis or for multiple years up front, then you have what we call a prepay expense. And typically you might not be able to just expense it. Now, there's different rules if you're a small business or large business because small businesses are often more concerned with the tax code in the United States. In other words, they're doing their bookkeeping primarily to be in compliance with taxes so they can complete that obligation. So the question is, how do I need to do it from a tax-based kind of standpoint? Because the tax code is going to be more skeptical of expenses. So the tax code is really not going to like, prepaid is not going to like being able to expense things because you paid them early, basically, because you might manipulate, when you pay the taxes and whatnot. So in any case, this is similar. If I go to the first tab down here to like the fixed assets, so you will recall the biggest example of like a prepayment, which has its own categories because it's so big, are the fixed assets. So if I bought a building, that would be like I bought a building of $100,000 for cash and I simply expensed it on a cash-based system. Why is that a problem? Because if I compare January to when I bought the building for $100,000 to February where I didn't buy the building, it's going to look like I had a terrible month in January and a relatively great month in February, which isn't the case. The real case is that I bought a building, which means that the building's going to last for like 30 years, right? So I shouldn't just expense it in the month that I bought it. I should expense it over the time frame I'm going to use the building. And that seems somewhat intuitive, and you have to do that for taxes as well. So you're going to have to put the fixed assets on the books as an asset and then depreciate them. Similarly with other prepayments, you can imagine like if you prepaid rent, for example, and what if you were on a cash-based system for taxes and you're like, I need to decrease my revenue to pay less taxes. My net income needs to go down to pay less taxes. How could I do that? I could talk to my landlord who covers my business building and I pay them 5 years of rent today before the year ends. And then on a cash-based system, I expense all of that in the current year instead of in the following year, lowering the net income in the current year. Tax code isn't going to like that, right? Because they're going to say, well, no, you're manipulating the receipt of the cash and you're messing up the tax code, right? So that's going to be the general idea. With prepaid insurance, it's the classic example, but you can see it with any kind of payment, like with the rent, for example. Prepayment, however, is always, or the insurance is always, in essence, a prepayment. So what we're going to do, the two ways you could do it, you could expense it, and then you could tell the accountant at the end of the year, do what you need to do for taxes or external reporting purposes to make it correct. But normally what we want to do, the system is usually easier if I go to the first tab to put it on the books as a prepaid asset, because the prepaid asset is a permanent account and then determined periodically on a monthly or possibly yearly basis, particularly for a small business, how much of it has been consumed, reducing the asset, recording the expense. So if you use this method, then it's easier, but it also means that you have to do that adjustment or it's going to be wrong at the end of the year. You need to do adjusting entries, which we'll talk about in a future presentation. So I'm going to put it into prepaid expense. Now, I possibly don't have a category for prepaid expense because this is the first month I did the data input. I most likely have insurance. So QuickBooks gave me a generic insurance and business insurance, property insurance, and so on, but those are all expense type of accounts. I'd like to put it in a prepaid. If I go to the first tab, I can look up here in the asset types up top. It's in order by current assets. And I do have a prepaid expenses. So maybe instead of having that prepaid expenses, I'd like to make it just prepaid insurance in particular. So I might go into here and just say, let's just edit this one and say, let's make this prepaid insurance. And then everything else looks good. So I'll just save that. And then I'll record this to that account, prepaid insurance. So I'm going to go in and go, okay, this one, I'm in here. So prepaid, hold on. Oh, I was under an item category. Prepaid insurance. There it is. All right, we're going to put it in there for $12,000. I'm not going to make it billable. That would mean that we would be able to pull it into an invoice, no tax. That would be a consumption tax. If I was going to make it billable, no customer. That would be if I wanted to make it billable and pull it into the customer. So we can cancel it, clear it. We can print the check if we were physically printing them. We can order checks, make it reoccurring. On the more button, we can void it. Save it, save and close, save and new. What's this going to do when we record it? It's a check, therefore it's going to decrease the checking account by the $1,200. The other side not going to an expense in this case, but balance sheet account prepaid insurance. Save and close, checking it out. Let's go to the first tab and we'll run it to refresh it, going into the checking account to check it out. And we can see then there it is, the 1,200 going into that. It goes into our actual check. MUI B to the N, closing this out, going back up to the summary report. The other side did not go to the income statement, but went into other current assets for prepaid insurance, 1,200. There is the 1,200 going back. Now notice that this prepaid insurance does not close out like the income statement accounts. It's a permanent account, and therefore you have to do an adjusting entry at the end of the year to determine how much of it has been consumed. If you don't do that, then it's going to be wrong, right? You're not going to have recorded the expense that you should have recorded, and so on. So when you talk to your accountant, you have to tell them, I'm recording everything to prepaid insurance. Here is the insurance policy. Please determine how much of the insurance should be an expense for the period covered, and make the adjusting entry for taxes and or external reporting purposes. Okay, if we go internally, by the way, if I go to the first tab and then I go into expenses, notice that if you just pay the expenses, you're not going to need to go in here as much, but we could, if we needed to track this expense form, I can go into here and say that we want to take a look at the check form. And then there's going to be our checks. Now we could go into the vendors. Now again, the vendors, you're going to go in here all the time if you enter bills and pay them later. But you might have sometimes when you want to go in here for the check that was made for safe insurance. Now notice you wouldn't have this detail if you didn't put the vendor, which is possible to do when you do the data input with a bank fee transaction possibly. And then you would lose the ability to sort by vendor because there wouldn't be one. But the financials would still be correct because you have the proper account. But add the vendor if you can, which normally you can because the information's in the memo, because then you could check it out by vendor in the event that you need to. All right, let's do another one. Another one, we're going to say, let's hit the button over here, say plus button. Another check form, which is similar to an expense form, but we're just going to use a check form so we can play with the check numbers. This one's going to Edison. So Edison, we don't have that vendor in the system. We're going to add it on the fly as we go. If it was a bank feed, again, this would be in the memo typically, and you would pull it into the vendor. and we're going to say save. So this is not the account. I'm not going to record this to Edison expense, but rather I'm going to determine Edison is a utility company, therefore either electric expense or utilities expense. It's coming out of the checking account, 126, check number populating automatically. And then when I go to the categories down here, now I'm going to choose a category. Now, again, if this was a second month of operation, I would have already paid Edison in the past, and the form might populate automatically, giving me the account that was hit last month, and that helps me to be consistent. But if it's the first month of operations, I have to choose an account. So I'm going to say, okay, Edison, that's a utility, that's an expense for electric. So it used to be that we put the utilities under one account called utilities, which might include like the telephone, the electric, the trash, the gas, and so on and so forth. That's when it was a pretty small dollar amount for each of them. And that's the classic question as to whether I want to group things together or break them out. It's up to you as to whether you want to do that, right? Because it doesn't really make a difference here or on the tax code for the most part, but it might be more or less information. So for example, if the if the electric bill is pretty small, then I might group it together with the gas bill still and just call it utilities. But if I grow things like I grow lettuce hydroponically, I'm going to have an immense utility bill, and I'm going to want to see it separately, in which case I'm going to break it out into its own account or possibly a sub-account of utilities. Let's see what they gave us here in our chart of accounts and see what accounts we have. I'm going to go down and say, okay, utilities, do they have a utilities account in the chart of accounts? I believe they do. So notice down below, I have to go to the next down here. And then we're going down. We got a ton of accounts going down to utilities. So they put a utilities and then sub-account, disposal, electricity, heating, blah, blah, and so on. That you could do it that way. Or a lot of times people, the way I would typically see people doing it these days is break out the telephone to its own thing because it's going to be significant normally, where it used to be under utilities. And then I put into utilities the electric and the gas normally, and possibly trash. So that's what I'm going to do. So I'm just going to use this account as the parent account. And then I'm going to make the telephone account not a sub account of utilities. If you record it this way, it's going to make your income statement longer because you're going to have a utilities account of a parent account and then the sub accounts and then another line item on the income statement grouping up the sub accounts into a subcategory number, which could be useful, but makes your income statement longer and a little more complicated. So what I'm going to do is I'm just going to put it directly into the parent account of utilities expense. All right. So I'm going to say the amount is going to be, let's say 620. It's not going to be billable taxes. What's this going to do? Decrease the checking account. The other side's going to go into the utilities, and it's going to give me the information if I needed it to check out who I paid by vendor in the vendor section. Save it and close it. Go to the balance sheet. Let's check this one out. Run it so we have fresh reports, not stale bread reports. We're going to then go into the checking account. I'm a snobby person. I'm like a French person. I don't know if I'm not trying to pick on French people, but you know, they have fresh bread. It has to be fresh, okay? I do not abide by reports if they're not fresh. I throw that out at the end of the night and I get some new bread in the next day. Let's go back. I don't really do that with bread, but it's the analogy that I'm trying to get at. Let's go to the tab to the right. Let's run it. And then we're going to scroll down, refresh it. There's the utilities. There's the 620. Very nice. So that's the standard that we would have. Most money coming out of the checking account is going to decrease the checking account, whether you do it with a bank feed or writing a physical check. And the other side is going to be some kind of expense form. The category of expense forms typically being the longest category of any of the categories on the financial statements, because the income statement, the income that we earn comes from one specific thing. We have specialized, and therefore we get all of our income from doing that thing. We pay for all other things, meaning That's why there's going to be a category of every other thing that we need to have help with in order to help us generate that one specialized thing that we do to generate income. Therefore, you have the most flexibility on how you're going to group the expenses on the income statement. Also, the expenses being the thing that will be most easily systematized with the bank feed usage and automated to some extent. All right, let's do it again. Otra vez, we're paying all these people, these dang people. You need to pay them so you can make money. I hate paying people. It's okay. Let's make another check form. They're helping us out. These are our partners. This time it's going to be the Verizon. They charge me too much, man. These guys charge me too much. Verizon, let's type in. I'm going to say tab, we'll add Verizon. We just need the name, so we're going to save that. It's going to come out of the checking account, 126, check number populating automatically, MUI B to the N, and then the category. Once again, it's not going to be Verizon expense that I recorded to. It's going to be, no, Verizon is the telephone company, therefore telephone expense. But if I go back on over here, I'm going to look at it and say, where's the telephone expense? They put it under utilities, and they called it phone expense. I don't like that. I want to have it in its own account, and I want to call it telephone expense because phone expense is too casual. I want it to be more professional sounding. So I'm going to go into here. I won't remember. I'll never type in phone. I type in telephone. That's how I do it, okay? I can't, otherwise I'll forget. So I'm going to edit this, and I'm going to call it telephone service. No, telephone expense. Now that's a repeat of the category of an expense. That's possibly why they call it service, but I think that's how most people would write it. And then expense category, that looks good, but I'm not going to make it a subcategory of the utilities. No, it's its own thing. The telephone expense stands alone. No subcategory, I'll just delete it. Okay, so then I save it. All right, so now I should have the telephone expense. Don't need to be any subcategory. Where did it go? It's still there. They put it in the subcategory. All right. No. Let's edit it again. I have to uncheck the checkbox. Uncheck the checkbox. Then it'll take it out of there. I'm telling you, I'm freeing the telephone expense from the enslavement of the parent account of the utilities so it can stand on its own. And now where did it go? There it is. All right. It has grown and now it's on its own. It's living in its own in the world. All right, and so then we're gonna say this is gonna be telephone expense. All right, so there it is. Okay, so you might want to put like the service period. That would be more detailed, but I'm not gonna do it for the example. 410, let's put for the dollar amount. What's this gonna do? Decrease the checking account. The other side's gonna go to telephone expense, and it's gonna have the vendor of Verizon of who we paid for the telephone in the expense category. So let's save it and close it and check it out. Go into the balance sheet, run it to refresh it. So we have fresh reports that smell nice and right out of the oven reports, the aroma. They should have a thing on the new computers where whenever you hit the refresh button, it gives you a sniff of an aroma sound so it can be fully immersed in the experience of bookkeeping when we refresh it. So there is that. We're gonna go back, close this out, and go back, and then let's go to the profit and loss, run it to refresh it, and then there it is. There's the telephone expense. Boom, categories being made as we go. Let's do another one. Let's do one for supplies. I'm gonna go again, add in a new one. I'll try to do this faster because we're running long on time. We'll add a check. Otra vez. Staples is a supply store here. It's like an Office Depot type of office supply store. Staples, we're just gonna add it, boom. And then we're paid Staples. We're gonna say check numbers populating automatically. Now Staples as a supply shop, I have to point this off. It could be like an Office Depot or an office supply shop. We might buy multiple things. That's one problem with it. Meaning, what if I bought something large at Staples, like a new, desk or whatever that's actually very expensive? Well, then I'd have to put it on the books possibly as an asset under fixed assets. That's a problem when we have the same vendor that we buy different stuff from, because I can't easily connect the vendor to the account where I can with the phone bill, because I only pay for one thing to the telephone company of Verizon. So that becomes an issue to automate it if you're on the bank feeds, which we'll talk more about in the future course on bank feeds and whatnot. But even if you're entering just a check, that becomes a problem. One way you can deal with that is say, what if the dollar amount is over a certain dollar amount, like $1,000? That's when you might say, okay, is this expensive enough that it's likely that it's going to be a fixed asset, and therefore I should put it into the fixed assets instead of expensing it. Otherwise, we could put it into supplies. Now, even if it were supplies, you also run into the issue that some companies like to do their supplies on an accrual basis. For example, if they were medical supplies, then you've got hoodlums that will break in and try to steal them, right? If you're around here, you got medical supplies, you got, the zombie drug people will come in and crack your head in order to take your supplies, so you got to protect the supplies, which means you have to track the supplies like inventory, which means you're going to be basically doing an inventory kind of method, putting them on the books as an asset and then expensing them. Or your supplies might be fairly small. So it's like, dude, even the crazy people don't want to break in here and steal my stapler or something. They're not going to get any, that's not going to help them get their medical supplies, right? That's not, so I could just expense it as we go, right? So I'll get a small thing and purchase it, and then I'll just expense it. That would be the easy thing to do. So instead of us putting it on the books as an asset, we're just going to expense it as we go. But remember, some businesses and some textbooks will use supplies as the precursor, leading us into the tracking of inventory. Some businesses will need to track supplies if the dollar amount gets large, and particular if the supplies are someone might steal them, right? Like they're more likely for theft and whatnot. Okay, so let's go, but we're just going to expense it. Now let's go back on over to our chart of accounts over here, just to see what did they give us for supplies. They made another parent account for supplies, and then supplies and materials. I think that's redundant. I don't see why you need a parent account and then a subsidiary account if there's only one of them. What's the point? So I'm just going to put it into the parent account, and then later I'll remove this account, making it inactive. Possibly later would be my plan. So I just need one supplies account. So I'm going to go back on over. I'm just going to put it into supplies expense type of account. Let's say it was $500. What's this going to do? Decrease the checking account. The other side's not going to go into an asset account of supplies, but we're just going to expense it, doing the easy thing instead of the accrual thing. And so we're going to save and close it. And then let's go to the balance sheet, run it to refresh it, checking out the checking account, and scrolling down. And so there's the supplies going into the supplies. We see then our expense form, closing it back out, going back to our reports, to the income statement, run it to refresh it, and there once again is our supplies expense. Now I have a numbering issue that I want to kind of adjust here. So I'm going to go back to my balance sheet, and I'm going to look at these in my chart of accounts. And I'm going to try to tie this into the bank feed that I already set up before. So here's the 3 checks that we have. And I'd like to make I want to make Edison check number 1009 and then Staples 1008, because that's going to tie into the bank statement that I've already made. So this will show you how you can adjust a form. So I could just go into this, right? That'll drill down on the form. And I'm going to change the Edison to 1009. And then I'm going to save and close it. And please confirm a check number already exists. I'm going to say, okay, that's okay, because I'm going to change the other one, I think, too. I'm going to save that. And then, so now we've got the next one. So there's 1009 for Edison. And then Verizon, I want to make it 1008. If you don't do this, by the way, it's not a big deal. You'll still be able to reconcile, but this will tie in to what I've created with my bank statement. And then the Staples, I want to make the Staples, so now I've got Edison is 1009, Verizon is 110. So Verizon should be, wait a second, Verizon should be, I have here 110. Let's see if I double check this. So save and close. I'm going to say save it. Let me see. So Edison, why is that bleeping up like that? That's driving me crazy. Edison 1009, Verizon 110, and then Staples was 1008. 1008. All right, let's save that. Sorry about that. All right, there's one more change, and that's going to be that this one right here, I put it in for 1,200. I want to make it, according to my notes, 12,000. So I'm going to go into this one and adjust it. Notice if I did this data input incorrectly, then where would that come up? It would come up on the bank reconciliation most likely. So I'm going to change that. Sorry about that. I'm going to save that.